In this video, traders, we're going to look at Dow Jones stocks ranked by weighting. Stay tuned. Hey guys, warm welcome to you. So you may or may not know that different indexes or indices are ranked with different strategies. In other words, what weighting does one stock have on an index compared to another? Now, I've done a video exclusively on that. Go and check that out if you are interested. But the Dow is very unique. The Dow Jones 30 kind of biggest or blue chip stocks, not really the biggest anymore, but blue chip stocks, is ranked by price. In other words, the weighting is given higher, or higher weighting is given to a stock with a higher price, rather than the more traditional method where the market cap distinguishes or determines the weighting of the index. Now, an index is made up of the price of all the constituents in the index. There's kind of a divisor added to it, and it comes out with a kind of price. And the reality is that one price or one stock moving doesn't have the same effect as another stock. That's what weighting is all about. Weighting is determined mostly by market cap, but look at the Dow, it's actually done by price. Now, I've written this down here and I've kind of rounded these up and down to the nearest 0.5%. So obviously if it's 0.5 and above, I've rounded it up, and then it's below that, I've rounded it down, just so we can see the clusters of weighting. So we've got the ticker on the left and we've got the weighting on the right. So this probably won't add up to 100% because there's going to be some rounding errors and stuff in there. But the point is, we can see how it's clustered, and we can see how disproportionate potentially this is. And what we can do from this, guys, is we can perhaps use this as part of our trading strategy. If you're spread betting the Dow, if you're trading the Dow via CFD, you can perhaps use this and say, well, actually, I might be able to get a heads up on where the Dow potentially could go, giving you a bit of an edge with your spread betting. So stick with this one. Right. So we've got Boeing sitting there at 9% at the top, which is crazy because it's not the biggest market cap at the moment in time. Biggest market cap is Apple, which is 5%. We've got there Boeing sitting there, UnitedHealth at 7%, 3M, Triple M at 6%, McDonald's at 5%, Goldman at 5%, Home Depot and Apple all at 5%. And the accumulation of those is 42%. So that's pretty skewed, right? 42% for the top 7. And then you can see the clusters, right? We've got 5%, we've got a few at 5%, 2 at 4, a lot at 3, going from CAT all the way down to Walmart. Then we've got Procter & Gamble, 2%, again a big cluster, and then some 1% there. So what does that mean? So basically it means that Coca-Cola, Intel have a 1% weighting. They have to move 9 times as much to have the same effect on the market, on the Dow Jones, as Boeing does. They have to move 6 times as much or 5 times as much as McDonald's. You get how weighting works, but it's an unusual way to do it, and it kind of doesn't make any sense, but it's been done for a long amount of time, and some people argue that it's not really indicative of what it should be, and etc, etc, but it is what it is. But as traders, how can we take advantage of it? Can we even take advantage of it? So one thing we can do, guys, is we can look at the most heavily weighted stocks. So that might be, let's just take these 3 for now. Okay, we've got Boeing, UnitedHealth and 3M. And if we take those and we say to ourselves, do you know what, these have got the biggest weighting, I'm going to put those on separate charts and I'm going to trade the Dow based on my normal strategy, but I might give more credibility to a trade if one of these big guns is about to break out. So let's say Boeing is there in a bull flag about to break out. Dow's sitting there double bottoming, perhaps unlikely because of the scenario of we might not have that situation, but you can imagine 2 setups that are occurring. Boeing starts to break, then perhaps the Dow will go as well. It's going to start to go, but if you see the biggest one with the biggest weighting going, that might give you more credibility and more inference, or it might give you more weighting on the trade. You might say, you know what, I'm going to add more weight to that trade because of the big guns are all kind of chugging on. Similarly, you might say, well, you know what, the Dow's up today, but these guys are sitting there, they're just stagnating around the VWAP. They're stagnating around the open. There's not a lot going on. So regardless, even if all of those suddenly started moving, it still wouldn't undo all the work of say Boeing. So you can kind of start to do this. And then you can also do stuff like stripping out one of them. So if you're trading one or the other, let's say you're trading Boeing, you're looking at Boeing and saying, well, Boeing is moving quite aggressively now. I'm going to trade the Dow against Boeing because I think that Boeing is acting in a positive or negative manner. So I'm going to go long down, I'm going to short Boeing. So I'm stripping out the biggest constituent if that is behaving unusually, for example. Or let's say there's some news broken out and this thing is going, nuts. I mean, none of these will go crazy nuts. Perhaps Apple would and Intel if given a chance. But generally speaking, they're more sluggish, kind of bigger movers with big volume. But let's say one of them is going nuts, especially one of the more higher weighted ones. You can almost trade that as a proxy for the Dow. If this thing's moving aggressively, then you can say, well, actually, I can trade the Dow based on the movement of this. This is about to break out, and I know that level's really, really key. And if it does, it's going to, rip through. The score, guys. The situation. If I can just see it on the screen here, very small, but you get the idea. You've got a market coming along, maybe there's a high here, and you know that if the price breaks that high, it's likely to rip for whatever reason. If you're watching Boeing about to get there and the Dow's just sitting there stagnating, you might want to take a long for a scalp. You might go, okay, well, I'm going to go long there because Boeing is about to break through the high. And when it does, it's going to give the Dow a little bit of an extra shove. Listen, I'm not talking about massive, but the fact that it goes might cause others to go. There might be a general uptrend anyway. You get the point. So what I don't want to do is add more noise to the trading decision. We don't want to be looking at every single one of these and trying to be clever about it. But what we can do is if the Dow's moving unusually, we can see if it's one of these higher weighted stocks. If we want to trade it and maybe use these as a proxy, maybe monitor some of these, or maybe monitor like a few of these, maybe we can put a few on our screen and just see if the general trend is kind of up, they're all pulling back gently and then they're all pushing back up. That might be, worthy of a buy. Let's say just one of them is not doing as well as it should be. Maybe you can say you can strip that out and go long on that stock compared to how you're doing on the Dow. Maybe hedge yourself off, short the Dow, long that, etc. It gives you options. Understanding how the weighting works and how the stock affects the index is useful, not only just from if you wanted to add another layer of strategy into it, which you may not want to do, but also just understanding, what's causing this index to move, why is it driven, and even you might want to just keep in touch with some of the news flow on that if you're specifically trading that index on the higher weighting on the constituents. So some options there for you guys. Like I said, another video I've done where we talked about weighting based on market cap against price. So check that out if you're interested in this kind of stuff. Take care. Bye-bye.